Today, Ireland will release the details of its latest bank stress test. It's the third round of tests for the country's lenders and will reveal how much additional cash they need. It will also show if the last remaining independent banks need to come under state control. Well, to discuss Europe's debt crisis and what it means for banks across Europe, I'm joined by Dirk Hoffmann-Becking, exchange analyst at Sanford Bernstein. Thank you so much for coming in, Dirk.
Thanks
in terms of, it's again a testing time for Europe because we thought, at least maybe I thought erroneously, that we were over the worst. And now we again have all these debt troubles in Europe. That's putting extra pressure on governments, saying bondholders may need to take a haircut, and that's putting extra pressure on the banking sector.
Yeah, that's absolutely correct. I mean, essentially, we're in a vicious circle where rising spreads for the governments, rising bank costs drive up the credit cost, reduce the growth expectations. Then the austerity programs don't work anymore, and the periphery spreads go round and round and round. So that's what we see in Ireland. That's what we see in Portugal. Is what we see in Greece. What's interesting is that Spain has decoupled from that process. So the periphery spreads are falling, and that actually turns the vicious circle into a virtuous circle. And that makes us a lot more optimistic about the banking sector right now than we were a while ago.
So you actually believe that Spain won't be touched?
At this point, with the momentum that we have in Spain on the liquidity for the governments as well as the banks, it's you need a lot of shock to reverse that effect. And there isn't much that we see right now that could create that shock.
But it's still, there's so much uncertainty regarding the banking sector in general. I know, you've upgraded some of the French banks, all three of the major French banks. But overall, if you look at the situation, well, we don't exactly know what regulation will look like. We don't really know what stress tests will look like in the second round. We don't exactly know much about the Irish banks at the moment. And of course, this must be very difficult for you to foresee the future in 1 or 2 years.
Yeah, absolutely. I mean, we sometimes feel as if we're taking an open-top car road trip through Helmand Province when you own bank stocks. But I mean, most of the items that drive the uncertainty have been discussed for a year and a half. And what we've seen in the Japanese crisis is that bank stocks have actually been surprisingly resilient against macro shocks. I mean, these stocks used to move when, butterflies flapped in China, and you have a massive crisis and the stocks hold up reasonably well.
But what is your biggest fear regarding the banking sector? Is it possibly the ECB withdrawing some of the funding? Is it interest rates? Will that have an impact on the banking sector? I
mean, the biggest risk is actually twofold. The Spanish momentum turns on the back of Caja's recapitalization not being regarded as sufficient, or the Irish go feral and write down the debt before the banks have been recapitalized, so in an uncontrolled measure. But the latter is not very probable. Would Ireland really go and create a financial crisis which doesn't help it in any way? I find that very improbable.
And Dirk, you actually like the French banks.
I do.
They think they're the strongest in Europe.
Yeah, because in the end it's a question of how much capital do you need and what are your funding costs relative to average, and that's where the French banks score very, very well. And if we have a world of diverging funding cost, then the ones that have the lowest funding cost will basically have the massive competitive advantage, and that goes for all three French banks.
Dirk, thank you so much. A real pleasure to speak to you. Dirk Hoffmann-Becking there.